Hello guys, this is Shahzad Rabbani again. As yesterday I have posted in my Facebook page and in YouTube page about the Aussie US dollars daily trading setup. I'm really pleased that a number of people have approached me and require to have another episodes which I was promised as well. So let's start the Aussie US dollar daily trading setup for swing trading. This setup probably very helpful for beginners, for intermediate sort of traders, and in order to know generally either doesn't matter you trade indexes, stocks, or any other online trading sort of work. It could be helpful in every chart, in every trading set, right? So before jumping into the chart, let's have a warning and disclosure. This video is only for educational purposes, and be aware that forex trading carrying high leverage of risk, and it isn't suitable for all investors. Right, this is the disclaimer from my side. Let's jump up to the chart. Okay, if you haven't yet seen my previous video, I highly recommend you people to see it, because it gives you a very much clue about the basic of understanding about the basic of this market, how to read. Right, just to summarize my previous video, I'm just gonna give you in bullet 1 to 3 points which I was having in my previous video. First thing which we need to know, that we don't have any lagging indicator in our chart. We have to have this trading setup on a daily chart. You probably you could choose it on 4-hour charts, or on weekly charts, or on a monthly charts. It depends how much type of trader you are. If you do swing trading, you probably stick with daily, particularly in stocks and indexes as well. Whereas in currencies, you can choose time frame 4-hourly chart, right? It depends on you, but this 4-hour chart trades may persist or prolong for 1 or 2 days, whereas the daily chart will present you, I hope will give you a real clue to have a bigger move. But remember, the bigger the move, the bigger the risk, right? In a later stage, another episode of this educational tutorial, we are gonna present about risk and reward. But here, at this point in time, we only focus to read the market, right? As a general principle, it is general principles being a trader. If I'm a trader, I would prefer and love to trade in trending market, right? The trend may be upward buying trend, or downward the sell trend. So I prefer to buy in buying trend and prefer to sell in selling trend. This is what I need to know, and for this I have daily chart, and I don't have any indication, as I really affirming again and again. The reason is mostly people are ask and give, why don't you use any indicator, because indicators provide very much good clue where the market will go. I have chosen almost all sort of indicators in my trading setups. This is the general normal phenomena. For example, I choose moving averages, right? I choose on a daily chart or on a 4-hour charts. Currently at point trade, at this point, the direction of that moving average doesn't match if I compare it, or if I will see 4 or 5 days later, or 1 hour later, or even 2 or 3 days later. The same scenario wouldn't give you, because for example, at this point, if any moving averages gives me clue of buying, and after 4 or 5 days or 7 days there is a mix of market compressions, or after this there was a sell and buying and so on, after 5 or 18 days, or 5 or 10 days, or 15 days, when I see the direction wouldn't be the same as it is now, right? So I don't trust on any indicator. As I told you, I'm just going to use only trend line, right? Okay. The second point, which I have firmly discussed in my previous video about the pivot points. Okay, as I have shared with you this Aussie US dollar chart. This is the daily chart, right? And we've been seeing this charts, or analyzed this charts right from the 1st of January 2016, where the market has made its lower point. After this point, the candles are going up till April 2016. So from Jan 2016 to April 2016, there was a buying trend, right? If I would, on this scenario, what would be my preference? Obviously to buy, but when to buy, right? For this, I have to understand that I have to buy it on a lower point, right, with minimal risk, right? So while discussing on all these things on my previous videos, I have pointed out the pivot points. I've observed, everyone can observe, that in this buying trend there is a candle, or there is a point where the buying has stopped, right? For example, in this candle, the prices has rejected and gone towards this point, right? So this is the price rejection candle. It could be doji, it could be hammers, it could be shooting star, it could be any other candle, right? But for me, it is a price rejection candle. So I take attention on this candle's high, right? After this high, this has made a low. This is again a price rejection candle, the sell price rejection candle. From this point, the prices were gone up, and made a new high. Okay, I have pointed in my previous video that every high buying market, every uptrend has a common series, a pattern, a higher high, higher low pattern, right? For example, in this Jan to April 2016, there was buying, and it has a pattern of higher high and higher low. How? This is the low, this is the swing high, because from this point the price rejected, right? So this is called high. At this point, I'm now talking about this candle. This wouldn't happen yet, right? Just assume it. This is high, right, of this low. After this high, the prices were rejected and reached on this point, and this point is low. But this is not a simple low. This is the higher low. This high is low. This is we called high low. Low, high, higher low. After this higher low, the market had posted a new high, right? So this new high is called the higher high. Then you have this pattern: low, high, higher low, and higher high. This is by definition a buying market. As you can see, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, all together, right? So what happened on this particular point? This is the previous swing low, this is the higher high, this is the higher low, right? At this point, when jump to now, we were talking about the selling trend. From this to this, from Jan to April, there were buying trend and had a pattern of higher high, higher low altogether, right? What happened on this point when the market has broken this previous swing low? It has done low and high, right? This is the low. After breaching this level, it has posted this swing low and this swing high. This is the low, this is the high, right? After this, you can see it has a pattern, a series of lower high, lower low, right? Lower high, lower low, lower high, lower low, right? So till on this point, on this candle, there was a pattern of lower high, lower low, right? So by definition, this is selling market, sell trend, short. You have to short when if you would in these scenarios, whereas in vice versa, this is the uptrend because it has a pattern of higher highs and higher low, and this is the sell trend, and this has the pattern of lower high, lower low, right? So far we have understood that about the higher high, higher lows. Due to the higher high, higher lows, make it sure it is a bit confusion if you are beginners, or if you repeat these words again and again and again, but it is remember, it could be very, very helpful for you. You can easily understand where the market is going, what the trend is, and what will be what will be the next scenario, maybe the next scenario, right? So if I would in this scenario, I need to buy, right? When to buy? This is the major buying trend called macro trend. This is the macro buying trend. But as you can see in a buying trend, there is also a selling, like this one. This candle is sell, right? After this high rejection, there is a sell. About 3 days there was selling trend, right? So this selling trend is called micro trend, shorter trend, minimal trend, right? This is again from this candle to this candle, there was a micro trend. From this candle to this candle, because sell, there was micro trend. From this candle to this candle, there was a micro trend. From this candle to this candle, there was a micro trend, and so on, right? So I have to enter to buy when this micro trend has ended. For example, this is the low, this is the high, this is the higher low and higher high, right? This is the pattern: higher high, higher low, higher high, higher low, right? So what I have to use only this trend line chart. You can have it in your trading terminal, the trend line, which is very common even if you use web browsing trading, right? So this is the high, this is the low, this is the higher high, this is the higher low, and have again pattern, right? Okay, after this high, the market has made this low, right? Understand? After this high, posting this low. This is the higher high, this is the high and this is the low. right? So you